when it comes to trading, more especially when we are still acquiring information, or when we are still learning how to trade or how to approach the market, we are usually told that candlesticks, they are the most important piece of our trading or our system. A system should involve candlestick patterns. But then the question is, are they really useful? Do we really need them in our analysis? So in this video, I'm just gonna be giving you some simple ways or approaches on how you can really apply candlestick patterns, or how to really see if they really fit into your trading system or into your trading strategy. So without any waste of time, let us just get started. So what you need to know as a trader is that to tell you the truth is that candlesticks, they are the last piece of the puzzle. They are the last piece of the puzzle. They complete the puzzle, but they are the last piece. They are not the main thing. They are not the primary thing. Why? Because the entire chart is made of candlesticks. The entire chart is made of candlesticks. So randomly, so you are likely going to see some important candlestick patterns occurring anywhere, occurring anywhere. For an example, looking at the price movement, you can see that we have a lot of reversal candlesticks appearing everywhere, dojis, hammers, engulfing patterns, any kind of a candlestick patterns that is categorized as significant. You can see that it keeps on appearing even in a place where it is not even a reversal, or it is not applicable to that kind of system we learned on how to apply that particular candlestick pattern. So that's the main important thing. Make sure that candlesticks, if you apply them into your trading, they are the last piece of the puzzle, meaning you should have a lot of other confirmation. You should have a lot of other strategies to confirm your entry, and then at the end of it all, then you can add candlestick pattern and say, if there is a reversal candlestick pattern, then I am gonna take that trade as a buy or that trade as a sell. What am I doing? Okay, let me try to make an example. Let me just make an illustration first. Let's say you are trading. Let's say you are trading this kind of a channel, and then let's say maybe you are expecting a breakout on the downside. Let's make this one as a good example because it's in the chart. Let's say now you are a seller in this kind of a downtrend, and you're expecting a breakout on the downside. I once taught about breakouts that usually when breakout comes, they are initiated as well by candlestick patterns. For an example, for us to see if this is a significant breakout, we have to first check the previous high. Were there a lot of reversal candles or candles pushing the market down, and as well as the candles that makes up the wave that breaks out the channel? So we can see here we do have some kind of reversal candles, as you can see, this green one, and then we have this three drive pattern where the candles, they become bigger and bigger and bigger. You can see, let me just remove that distraction. You can see we have a red one which is smaller, and then a red one becoming bigger, and then the other red one becoming even more bigger. So it's a pattern, it's a candlestick pattern, which means we can now confirm this as a good breakout. Why? Because we've seen that there are candlestick patterns there, and not that the candlestick patterns are the primary. Remember, the primary thing, it is one, the trend. Secondly, it is the channel or the corrective wave. That's the second thing. Thirdly, it is maybe the oscillator, and then we can say, let me add another confirmation if necessary, just to make sure that you boost your analysis and you make sure that you make it as valuable as possible. So first thing, candles, they should be the last piece of the puzzle, not actually a primary thing that you look as a trader. You should make sure that when you analyze or when you confirm your trade, they don't only rely on candlesticks. They don't only rely on candles. Make sure that you also add a lot of other stuff around this. As I told you, that at least you have oscillator, you have some kind of chart patterns, you have some kind of momentum, you have some kind of direction. So make sure that you add a lot of things so that your trading doesn't lean on candlesticks only. It is going to be bad. Yes, candlesticks are very, very important. They portray a very, very beautiful message, and as well, you should have the ability to interpret them. That's crucial. You should have the ability to interpret the meaning of a candle. For the fact that we've learned that a candle, let's say this candle is red. Let's say this candle is red. For the fact that we have learned that a candle is made of a body, a wick, a close, and an open. So make sure that as a trader, you do interpret a structure of a candle. Don't just look at this and say, this is a reversal candle, this is a reversal pattern. Ask yourself, why is it called a reversal pattern, or a bullish or bearish reversal, whatever. So make sure you ask yourself and then interpret them in a good way, saying, okay, price, let's say this one is green. You will know that, okay, price, what happened with price, that it opened here and then it went down and it was rejected here, it went back up. So already you have a mindset that, okay, wow, price is being rejected. It means that there is some force pushing price up. There is some force pushing price up. For the fact that you are seeing a long tail means that there is a rejection. So the moment you read the candlesticks like that, you see that there is now sense in your trading. There is now interpretation. Your trading is now translated. You know what to take, what step to take or to act upon, because there is now some kind of information behind the structure. It's not just a candle, but there is information behind. So yeah, I think I will keep it short. Make sure that you don't just consider candlesticks as primary in your analysis. They should be a last piece of the puzzle, and make sure that you interpret them efficiently. So thank you for watching this video. Remember to like, share, and subscribe.